welcome back everybody to the Krusty Krab, because Krusty Krab pizza is the pizza for you and me. Just kidding, it is market day. I am your designated Inquirer. My name is Axel and today is 9/21/2020, and today we're looking at the NASDAQ and probably Bitcoin. We're going to be taking a look at a little bit of Bitcoin and gold in reference to what happened to them today, because today one of the major headlines of what was going on was that the dollar was moving. The dollar moved, guys. The dollar moved. And why? Because bond prices are going up, just like the bond king predicted. It's amazing. The thesis is coming true. We're being led to the promised land, guys, and equities are gonna crash through the ground because the dollar is gonna go up and premium paid for bonds is gonna go up, and so yield is gonna go down, and all that good stuff is gonna happen. Good stuff in that it's predictable. That's pretty much it. But it's gonna be very terrible for the rest of the stock market. What's gonna be happening in the economy is still very terrible. And it's going to be terrible in terms of actions taken by the Fed up until demand actually does begin to pick up again, in which case it'll be nice. But government will have to do the first step of providing stimulus, which probably is not going to happen until after the election. And even then, depending if there's a change in regime, there will probably be no action unless there is a swap in Senate. And then not until the Senate is confirmed in on July 20th, whenever the inauguration happens, when both the House and the Senate, the new House, are inaugurated, and we have a new term beginning. Because if there is a change of regime, the outgoing party is not going to want to help the incoming party. Vice versa. That's where we're at as a nation, as unfortunate as that is. That is where we are. Now, let's take a look. Okay, today we went below basically the they're not exactly Bollinger Bands, but they are a standard deviation away from the point of control. Now, because we went away, which I should keep a mental note of, when we go away from the point of control, what does that mean? It means that basically we are approaching a reversion to the mean. But does this mean that we're going to be going to the point of control again? Not necessarily. If we are now in a bear market, which we kind of are confirming now, because this moved down, we went sideways, and now we're moving down again. This is very particular. Now we could be possibly confirming a bear market, even though we kind of broke trend a little bit today because we went a little above. The same thing was happening all the way down before, like here, like there were other times where we kind of did that and the market did not respect it. Like here, this could have been the start of a correction there. Didn't care, just decided to keep going, right? It can happen. It can happen 100%, right? But right now, it does look like we're on our way to a correction. So, what can this look like in terms of running away from the point of control when a point of control is so far away from the top? Because if we're going to be going on a downtrend, if we're going to be going into a bear market, if we are, which is possible at this point, considering the following, okay? Considering the following, that right now we're turning around on the monthly chart, okay, on the NASDAQ, okay? We are the weekly. On the weekly, we just got a turnaround on momentum. That momentum is shifting, okay? I don't know if we're going to get to negative momentum, To do so would be a very large turn back and possibly below this point, which could be the major correction that we were waiting for. Could be, okay? Considering what the new cycle is going to be over the next few months, if no stimulus is passed, this could be it. This could be it. Because this sort of change on a weekly scale can sometimes prove to be pretty significant, considering the shift and how far up we've gone in momentum. Okay, to go into negative territory is pretty significant. Okay, we are only basically a few weeks into what could be a multi-month process. Okay, this could be at least a month long, if not longer. It could take a couple months to find a bottom, if not longer. Because when we go to the monthly and we go here, monthly, each bar is a month here, okay? From the peak, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. It took a year and 4 months, a year, 5 months to find a bottom. Okay, this can take a very long time and it can be very painful. Okay, whatever happens to be this next run up here, this dead cat bounce, which I lived through, and I was studying economics at the time in school as it was happening. When we finally get this type of like news, etc., whatnot, it's gonna get pretty bad. Get pretty bad all the way through it. Okay. Even when the market started to recover here before the economy, when we started to see green shoots, is when the stock market likes to improve, but not the economy. The economy is not in a good place until basically it's recovered its value. The money recover. We've undergone a very large disruption in economic activity. Generally, any sort of small disruption of economic activity can lead to a recession, which can lead to these types of moves. Even if it's a small one, a small correction, or a large one, which you experienced back in 2008. Okay, this could be this bad. Again, we remind you guys how bad it could be. Considering, all right, this was bad. Cover, okay. This was 55%. This was a 55% drop to the NASDAQ. Okay, and this wasn't even 1999. 1999 was even worse. Okay, here from the high, 55% down is a very long way. Okay. Is a very long way. 55% down, if we just match the last one, okay, is a NASDAQ that goes to below 6,000. That's a very painful process for a lot of people. You guys want to make sure that you guys are on the right side of the trade, and if you guys don't want to mess with short positions, etc., then you guys need to be out of the market. Out of the market. Try and stay in some cash, because guess what? The dollar is going up. We're going to be going through some deflationary processes. If this is the larger recession, which a lot of people are probably seeing that could happen. This is it. We're going to be going through a very rough deflationary process, which is why the Fed decided to hold the interest rate near zero up until the end of 2023. Okay, this is a very long time to hold rates at near zero to hopefully get inflation up to 3%. Okay, so for at least the next year, if not a little bit longer, we're going to be seeing declining returns for the stock market. It's not going to necessarily be Biden's fault, even, well, it kind of has been Trump's fault to some extent. Okay, because he did not manage a sustainable growth rate. Okay, he took the shackles off of the engines that regulate growth, that regulate industry, etc., whatnot. He let them run rampant, but when they run rampant, they also run hot. When an engine can run hot past its regular limits, what happens is that things break. When they break in a very ugly manner. And when that happens, well, people get hurt, people die. That's what could be happening right now. Now, let's zoom in a little bit here to take a look at what was happening on closer. Okay, the whole reason why I wanted to take a look at that other stuff was because if we go to the 2 hour for a whole year and we take a look at what was going on in March from February, what I wanted to see past February, okay, was this chunk of time right here, okay? And why do I want to see from before February, from the month of February and the month of March? Because here on a downturn, the point of control was not necessarily respected. But what was going on is that it kind of was in a way, because points of control are important on the way down as well. Previous points of control. Okay, so this area right here where a bunch of points where this monthly point of control was established is also the area where there are a bunch of points of support. Okay, they happen to line up both because it's a good price for the market to fall back on where the nose is there's volume, but also because there are points here that have been established as points of support. Now when on the way down, that's where we're going to be seeing these bounces, okay, where you can sell, load back up, and then wait for the next, this is right, wait for the next point of control. Okay, the next point of control is down here at around 8.4, okay, basically below this line right here. Okay, this point of control, we saw some on the high side points of resistance, but also a little bit point of support. But more than that, this general area where we saw the highest volume is going to be the area we're going to be seeing the most volume and the most support on the way down, which is exactly what happened. That's the area where we saw the next cache of volume where support could be found. Okay, and that's where on the way down where we saw higher volume. Okay, now on the way down, oh wait, but that's not even the last one. We got to go back even further to catch another one. All right, so let's do that. So further back from this one, we got that one, 8340, and then behind that one we've got one step below that, and then we've got this one over here, which is 7918, 7918, 7918, 7918, 7918, around there, which is where the next portion was, where we found support, where there was a next bounce to keep following it lower. Right, this is what we were discussing before, and this is exactly what we're seeing. So points of control on the way up are where we're going to be finding those bounces. Okay, so on the way up, now that we're here, okay, on the way down again is where we're going to be seeing that support, which is exactly where we're at. Okay, so let's make a mental note here as other points of control. Monthly points of control. All right, we're gonna add this one. We're gonna add this price level here. Price level. Okay, we're gonna make this one nice and thick. Okay, we're gonna make it thick. and we're gonna show the name on the right, and we're gonna on the left, and we're gonna call point of control. That's for June. Goes. Okay, that's gonna be point of control for June. Now we're gonna run a little bit further back here. We're gonna find point of control here. Okay, we're just gonna adjust this one into properties. We're gonna show on the left. And right here, point of control May. Okay, and we're gonna make this one a little thicker. Okay, there we go. Alright, there it goes, a little thicker. And the next one here, okay, it's gonna be, we may have a hard time getting past basically the previous low. Okay, it can still happen, but if we're due for a big one, we're probably gonna be hitting these points of control on the way down. Okay, so they're gonna be points where we can basically sell a chunk, and then buy it a little bit cheaper. You guys are going puts on the way down, right? There are levels that we can probably expect some sort of rebound. Let it go up a little bit, purchase a put, and let it fall through. Okay, at least that could be partially the game plan. Not 100% for sure. Do not take these as recommendations. They're just my suppositions of what can statistically happen. Okay. Points of control. This is going to be for April. Okay. Dotted line. Thick. Alright, so those are our levels there, okay? Those are our levels on the way down, okay? It's not to mean that it is going to be everything, this is it, okay? That's not going to be that's it. We can possibly fall way below this, okay, to the 6,000 level, basically below the March lows. This could be what happens, okay? I don't know if it's going to be like 99 where we fall 70%, or if it's like 2007 to 2009 where we fall 55%. Okay, it could be any of the above because we did reach 12,465, which means we could fall down at least 50% to 6,232.5, around there. Okay, just half of that number. Half of that number, 70% of that number is basically the area where we're probably going to be falling to. Okay, because it does look like we're starting a bear move. Okay, from these longer term, like along the way, there's going to be a lot of ups and there's going to be a lot of downs. There's going to be a lot of money to be made on the way up and also on the way down. Okay. So going to be a lot of time for day trading, but generally the longer term stuff is going to probabilistically probably be to the downside. Okay, please do ask your own financial advisor for advice. Do not take my say so as a recommendation by itself. Please use it only for educational and information purposes. Do your own due diligence, find your own information to try and verify or to debunk what I'm saying, because I do not know everything. Okay, and I am not a licensed financial advisor in the state of California. It's not who I am. Okay, so all right, back to the 5-minute. What also happened today to contribute to all this? Okay, in essence, now we're getting into about 20 minutes here, but this is important. Okay, let's take a look at Bitcoin real quick. Bitcoin did drop. Okay, but why did it drop? Apart from bonds going up, etc., whatnot, it is because we did see a increase in Go to currencies. We're going to go to currency indices. Here we go. DXY. Right. Here we go. We did see a rise today. All right. We went from basically a 92.87 to a 93.55. It doesn't seem like a lot, but for the market, this is a ton. Okay. It was basically responsible for a drop in Bitcoin, okay, which is a currency which is competing against the dollar and against gold. And we also did see a drop in gold, okay, which is /GC. Okay, this was a drop in gold due to the rise in the dollar, but also to an increase in bonds. Okay, we did see a huge jump in bond prices up and above the previous high, intraday high, which is really great because this also means that we probably have a way upward now. Okay, some of the defense for the dollar bears is now falling apart. Okay, bond bulls are now taking control of the ball, as Steven Van Meter would say. Okay, we're making our way up higher. Okay, we're making our way up higher to try and make that touchdown in the promised land of 181, this territory. Okay, there's a bunch of hurdles that we have to jump over, including this big one right here, which is 172.32. Okay, this 170 area, all right, is a big hurdle for bonds. But that's where we're at. That is where we are at. Okay, and because we've got a large amount of pressure to keep bonds high, yields low, this is probably also a reason why this is going to continue to happen. Okay, the externalities of the market, etc., are probably a way for a way to justify the news is probably going to be upcoming. Okay, whether we're seeing it's a weird conundrum, but it's not until later on where we've got other factors that are going to contribute to bond prices, etc., or whatnot. Irrespective of what the Fed is doing, to be able to overpower what the Fed is doing, then we'll be able to see the type of inflation and effects to monetary supply, to the dollar, to bonds, etc., to where Steven Van Meter's theory still works. It's still going to be doing what he says, but it's now at a different stage, right? Because he said there's like multi-part stages to his theory, right? So that's basically where we're headed to. We're headed to the later stages of his theory and his thesis. Okay, it's not debunked. It is just morphing into a beautiful butterfly. Okay, so that has been your market day. I hope it wasn't too long. I hope it was full of information that you guys want and need and crave. If you do, please give me a like and subscribe. Share this with your friends who you believe need this information as well. And until next time, you guys take care, stay safe. I already said take care. Well, see you later, guys. Bye.